if you have been struggling with fair value gaps or heard about them but don't exactly know what they are, I'm about to explain it to y'all in the best way possible. Right? So a fair value gap is a three candle pattern. And as you see right here, this is a three pattern. This is the three pattern candle that we get. It will be this one, two, and three. Now remember, within these fair value gaps, all colors do not have to be the same. But that second candle, the biggest candle that makes the gap between the two other candles, is the candle that's showing us which way price wants to go. So since this bigger candle, the second candle, is bullish, this showing us that price does want to continue upwards. This is a bullish fair value gap, right? Even though the first candle is red and the third candle is green, this is still a bullish fair value gap. Now, let's say if this big candle was a red, a bearish candle, that would mean this is a bearish fair value gap, right? Because it left a bearish gap, right? This is the power candle. This is the candle that has the most power, right? These are just a candle that starts and stop that gap and stop the fair value gap. But this candle right here is telling you if it's bullish or bearish. So in this example, this is a bullish fair value gap. If this was the red candle, this would be a bearish fair value gap, right? So this is showing us that price wants to go up. Now, you can't see which one I'm talking about. Is this one, and this one. Like put a box on that bit, which would be like this. Let's see. I even draw it. So this is the. Wait, I can even put it like this. Bro. So this. Oh crap. This would be candle one, which is the red candle, right below this area. This red candle, right here. Candle one. It's a three candle pattern. This would be candle two, right here, which is this big green candle, which leaves the gap between these two candles. This is the candle that starts off the fair value gap before it even gets started. Feel me? And then we have this third candle, which will be this little small green candle. Candle number three, right? Fair value gap is a three candle pattern. Boom. Now, you will see that in the fair value gap, you'll come here, make a rectangle. You'll see that this big candle to the upside is what divides.
Are you talking between to yourself or are you recording?
Yeah, I'm recording. This candle to the upside is what divides. This candle to the upside is what caused this gap between these two candles, right? So, with that being said, we should see a clear gap. So, boom. The gap should be from candle one, the top of the wick of candle one, which is the small red candle, the top of that wick of candle one, to the bottom of the wick of candle three. And this small green candle is candle three. So it'll be somewhere right there, right? And then the gap will be basically this big green candle or big red candle, depending on which way it goes. And you'll stretch it out like this, right? And the gap is coming from 1, 2, 3 candles, right? So what we want to see in a valid fair value gap is we want to see price tap into this area and then bounce off of this area, not closing inside of this area and getting out and pushing up higher. So we use this gap as power, as an engine to go up higher, because what a fair value gap is basically when price moves so fast that it leaves a gap and a lot of orders are not being filled. So what price is going to later do is come tap into that area just so it can start pushing up higher as it did right here, right? So what would make this fair value gap invalid is if it did not leave a real gap in between. Now you see with this candle, it caused the real gap in between, but sometimes price will do something like this. It will have long wicks on the third or the first candle, meaning it will look similar to this. Boom, you see how the wick's short right now? But sometimes we will have long wick, and then even with this first candle, we will have a long wick to the upside too, right? And if these candles look like that, like they wicks were longer, this will no longer be a fair value gap because there's no gap in between now, right? These wicks are now overlapping. It doesn't leave a gap anymore. So if we were to try to draw a rectangle with these, because this will be candle one, but it will have this long wick, right? This would be candle two, but it has this long wick. So it would no longer even be a gap. It wouldn't cause a real gap anymore because what we say, the gap needs to be from the top of the wick of candle one to the bottom of the wick of candle three, which will be right here, right? And that will no longer be a gap anymore. So it's important that we know what's invalid and what's valid fair value gaps, right? So in this predicament, let's take out the drawings. It should be right here. And as you can see, the gap is clear. It's no wicks overlapping this gap. It's a clear gap, right? From the top of the wick of candle one, which will be right here, to the bottom of the wick of candle three, which will be right here. Boom. And as you can see, beautifully, price tap into this fair value gap, then pushes up higher. Now, another thing we want to be on the lookout for is it is invalid. We don't want to look at this fair value gap if, when price decides to tap in, it closes inside that fair value gap. So now let's say this red candle, it decided to come into this fair value gap, but it closed just like this. Let's say it closed like this, right? Boom. We get a red candle and it closed within this fair value gap, right? This will now be invalid because we want to see price tap into it. All we want to see is a tap and then get out. That's showing us that it has a powerful reaction to this fair value gap. When it taps into it, grab orders, grab money, get out, and then push up higher. That is what we want to see. If price comes into this fair value gap and it closes fully in this fair value gap like this, and it closes inside it, the candle is closed now, we no longer want to look at it because now what can happen is we get a inverse fair value gap, and the inverse fair value gap is just when you have original fair value gap, which is this one we've been talking about, and then you get another fair value gap that basically disrespects this fair value gap, right? So now we get a fair value gap to the downside, right? Like I said, it will basically look similar to this. If we got an inverse fair value gap, we would get one candle, then we'll get another candle, which will be inside of the area, and then we soon will get another candle that will be outside of the area, right? And if these candles had wicks or whatever, we will be able to identify this three candle pattern that I just draw out as another fair value gap, but now is disrespecting this fair value gap because right, it just ran through it. So it ran through this original fair value gap that we was waiting for price to tap into, right? Now it basically just ran through it. That would be considered an inverse fair value gap. When price closed into that fair value gap area and then it continues to close down. Now, if that happens, you don't want to just press sell and say it's reversing all the way yet. It is a real reversal with fair value gaps whenever price closes and break below that first candle that started the fair value gap, right? So initially, we will already get the idea that it's going to reverse whenever we get a candle that closes within this fair value gap. It closes inside of this fair value gap. So we already know that it may be reversing because it didn't just tap in and get out. It actually closed within it now, right? So now we're going to be looking at it as reversals, but we won't actually press sell until price closes below this first candle that started that original fair value gap we were looking at, right? Which would be under this bottom wick of that red candle right here. So until price closes below this area, which will look similar to this, we can't consider it a reversal. But whenever price fully closes below all three candles of that original fair value gap, we know that it's finna reverse. If it looks similar to this, we get three candle pattern that closes within it disrespect our original fair value gap, similar to that. Now we know that price is trying to reverse and we can target these lows. But initially, we wouldn't want to see that because we would hope that price could just tap into our fair value gap, get out, and then shoot up higher, just how we did in this example. So this is what a fair value gap is. Be on the lookout for fair value gaps that are not really valid. All right. And another thing to notice is this is the first candle, right? This is the first candle right here, one. This is the second candle right here, two. And this small little green candle at the top is the third candle. Now peep how each candle has a little wick, right? Because candle one, like I told y'all, the gap has to be from the top of candle one's wick, so right here, to the bottom of candles three wick. So that means these candles need wicks, right? I say that to say because we come here and a lot of people will be like, is this a fair value gap? And don't get me wrong, I'm not going to just say it wouldn't be, but we just can't consider this a valid one just because this first candle that will start that fair value gap doesn't even have a wick, right? So if he was to try to draw it, what I say, the first candle, it'd be from the top of the first candle wick, which would be basically this candle. We'll have it right here, and then it'll go to the bottom of the third candle wick, which would be right here. And the gap will look like this, but we usually do want to see that wick on every candle, right? We want to see that wick, well, especially on the first candle and the third candle. We don't really care about the big one as long as it left that gap in between with no wicks overlapping. But yeah, this is invalid, even though it's still, price tapped in and actually bounced off of it. It's not a real fair value gap just because it didn't have that wick right there. But as you can see, it's still an imbalance. And the imbalance is basically when price have a big move up with no green red candles in between, a big move up, no red candles in between, even if it's not a fair value gap, it's an imbalance. And the same for if it was going to the downside. Now let's see what is not a fair value gap. What is not a fair value gap? Uh, Even this, we can see that this Loki is a fair value gap as well. We got a live wick right there, wick down there. Boom. Damn. Damn. My shit tripping, bro. Trying to zoom out of this. Bro, why do we do that? I swear, just map it. I mean, MacBook be blowing me sometimes. I'm gonna drop that bit on here. Trading view. Scroll down. All right, but boom. And this is a fair value gap right here. Boom. But this fair value gap basically got disrespected. It ran through this fair value gap. It didn't leave an inverse fair value gap, but it definitely ran through it. And this would have never been invalid for us in the first place. Boom. This is a big red candle, so this will be a bearish fair value gap. So what we would want to see is price tap into this gap and then go downwards. But as you can see, it did not do that. So the gap would be from the end of this wick, because now it's to the downside. So now it's going to be the end of the first candle and the beginning of the third candle, the top of the wick of the third candle. And it has a little wick right there. I don't know if y'all can see it, but and then at the top of this at the bottom of this first candle, the bottom wick of the first candle, the top wick of the third candle, and this second candle is what should leave that gap, and we should stretch it like this. Boom. Just like this example. What we would want to see is for price to tap into this fair value gap and get out. But as y'all can see, Price came into here and closed. It should have never closed into this gap. That's not what we want to see. We want to see price weaken to this area and get out and continue its trend to the downside, because this is a bearish fair value gap. It's showing us that it wants to sell. You know what I'm saying? The sellers were in control with this fair value gap, because the bigger candle is telling you who has the power. But anywho, we want to see price tap into this area, then get out. But instead of doing that, price came into this area, it closed with this first green candle. After it closed, price act like it wanted to get out, but it then closed again. And as you can see, it kept closing inside this gap. So this would have never been valid to us. You would have never wanted to take the trade off this fair value gap, because price already closed inside this gap. And what we want to see is price tap into this area, get out, and then continue. So once we see this candle close outside of the fair value gap, now we would have felt comfortable with entering on the next candle, having our stop loss. Oh shit, we would have felt comfortable entering at the next candle open, having our stop loss inside. We can have it under that bit, or I would have it at the 50% mark since price already tapped into it. So I have it at this level, and then, you feel me, we could have cashed all the way up like this. After price tap into that fair value gap, I would have entered there. Boom, and it would look like this. But with this one, price did not just tap into it and get out. So a lot of people, they saw this fair value gap and they was just rushing, bro. They seen price coming to this area while this green candle was still moving. They saw price coming to this area and they just hopped in. They would have been hit. Short. Boom. They would have been hit. They would have hopped in right there. They would have hopped in right there. The shorts would be back here down. When you sell to lows. We sell to lows, we buy to highs. Alright? Boom. We put price right here. Then we put our stop loss above this first candle that started that fair value gap. And as you could see, we would hit our stop loss simply because we did not wait for price to just tap into that area and then get out. Price closed inside this area. We don't want to see a closure inside that area. Right? But boom. So after price closed inside this area, you see it start moving upwards. Now, we would know that this would be a reversal, like I told y'all. When price closes above every candle of that 3-candle pattern, right? This is the candle that started it. This is the candle that made that gap right here. And this is the candle that ended the fair value gap. Now, when we're looking for a reversal, so price, when we're looking for a reversal, price since price closed into this fair value gap, we'll now be looking for a reversal or trying to see what price gonna do. Boom. Come right here, make your line above that first candle that started the fair value gap, which will be right here. Right? And let me take this line off. It will be right here. If price close above this area, right, this is showing us that it is finna reverse, because 1, 2, and 3. This is the 3-candle pattern that started that fair value gap. Candle 1 will be this green candle right here. Candle 2 will be the biggest candle that, has the power of the fair value gap, that caused the gap, right? Because this candle was what made the gap between that first candle and this third candle, right? And then boom, this green candle right here with this long wick will be the third candle, right? So once price closes above that first candle that started the fair value gap, that's showing us a sign of reversal. Boom. As you can see, price broke above this first that first candle, just like this. Boom, just like this. And as I was telling y'all, this is not really a fair value gap right here because it didn't really have a wick on the top of this first candle, but it is an imbalance. So price will most likely tap back into this area, and as you can see, it did tap back into this imbalance area of this 1, 2, 3 candle, because that's where these tap came from. It's tapping into this area right here of these 3 candles, right? Even though this candle not having a wick is what made it not be a fair value gap, it's still an imbalance. It's still a move up. It's still a part where orders have not yet been filled. So price will probably come back down, fill orders, tap into that area, and then shoot up, right? And we would get all this from when price first closed above that first candle that started this original fair value gap. We got to close it right here above that area, right? But then we peep another little imbalance slash fair value gap. Not really one, but now we wait. We wouldn't even want to enter just because we see this one. So we want to see price tap into it and show signs of filling orders. Boom, right here. They tap into it. Now we could have had our position, a long position. Once price tap into it, I lucky would have went on the next game. Or actually, I would just wait for price to break back above this area. Because when price break above this area, that's showing us that buyers are in control, sellers are no longer in control. So when price could come back above this line, I'll be comfortable with entering, especially after it had a lot of times where it's grabbing liquidity. So I would have waited regardless. But once price came back above this line, which would be right here, gave us that little pullback, which is right here. That next candle, I would have been ready to go in, which would have been right there. Your stop loss would have been, could have been at the 50% mark or under that original fair value gap in the first place, because price should no longer go that area. Boom, but I'll keep it at the 50% mark. I would have entered off this candle right here, and then you would have been able to catch. You would have been able to catch this whole little movement up, right? Just off of knowing fair value gaps and knowing that price disrespected this original fair value gap and tapped into this imbalance, and now price has the power to continue upwards, right? Especially since price has been in an uptrend, overall. So we know that's where price wants to go. So in this whole time we've just been looking to take longs. But yeah. This is an example on fair value gaps, an example on when fair value gaps are not invalid no more, are not valid no more, because price already closed into these gaps. So we no longer even looking at them the same no more. We just want to see a tap, then get out and continue way back to the downside. But it didn't do that. So now the next thing to do is to wait for price to fully break above this whole 3 candle pattern. All right. And again, if this pattern, right? Because don't forget, what makes a fair value gap invalid is if wicks are overlapping. If the wicks are overlapping and there's no clear, if you can't draw a rectangle box, there's no clear gap, it's not a fair value gap. It should be no wicks overlapping this second big candle. Alright. So this third candle will be like this, and then this first candle will be similar to this.
I'm gonna just leave.
Right, and then right here, the end of this first candle, and then the beginning of this third candle. It wouldn't even be a gap anymore, right? It wouldn't even be a gap anymore. So pay attention to that, and that's why you should always just draw out this little rectangle. You feel me? Draw out the little rectangle so you can see where the gap is at. But in this example, we can see that it actually did leave a gap here. So that's why we went off of that. From the end of the first candle to the bottom of that third candle, it was actually a gap. And I could actually even go back and show y'all. Look, it basically looked like this at first, right? It basically looked like this at first. Boom. It was just a gap, right? A full clean gap. A full clean gap like this. So what we would have wanted to see is price tap into this area. We wanted to see a candle. We want to see a new candle like this, right? A new candle come. A new candle come. And it's supposed to Boom. Tap tap into this area, but then get out and then continue back to the downside. Continue back to the downside. Start giving us downs and continue back into these lows, right? Because we sell to lows, we buy the highs. So it should look similar to this. But as you can see, as you can see, price decided to close within that fair value gap. And that's what caused us to look at it differently. And as price play out, oh shit. What happened? But as price played out, we see that price closed into it, and yeah. Price closed within that fair value gap, and then it caused a reversal to the upside. And as you can see, it just was a reversal all the way through. I'm not used to that little replay shit, I ain't gonna lie. But yeah, this is how fair value gaps work. This is what to be on the lookout for. Make sure you make sure that these candles are not over wicking, bro. Make sure the candles are not over wicking, because that's the only difference. They kind of tell you that certain stuff is not fair value gaps, because that first candle, that third candle will be over wicking each other, right? And we won't want to see that. And then when it's time for price to tap into it, we want to see price just tap into it, leave a wick in that gap, not a candle closure. But as you can see, we get candle closures in this area. So that's also what we would not want to see. But with the original fair value gap that I showed y'all in the beginning of the video, this is exactly what we would want to see, right? Exactly what we want to see. And if you just back in, let's see, start new. Here's back in where that fair value gap start right here. Boom. Boom. Fair value gap right here. One candle, two candle, three candle. So in the bullish fair value gap, again, it's gonna be from the wick of the first candle. The gap is gonna be from the wick of the first candle and the bottom wick of the third candle, which is that candle, right? It'll be similar to this. And this second candle of the three candle pattern will be the candle that leaves the gap. This will cause the distance, right? It will look similar to this. And as I told y'all, we will want to get a candle, a new candle similar to this, a green candle, red candle, whatever. And instead of price closing inside this area, we will want to see that new candle come in, wick into this area, just wick it, touch this area, come out, and then continue upwards. Grab money, because a lot of money will be in this area. Grab money, fill orders, and then push price back to the direction that it originally wanted to go, which is in the uptrend, right? They want to continue that uptrend, right? So it tapped into that fair value gap. Now it's time to continue that uptrend. And at this point, right here, once price gave us a wick inside of this area, right? Price gave us a wick inside of this area. Boom, we will see, okay, cool. Price is rejecting. Price is reacting. This is a beautiful reaction off of a fair value gap. Price is now reacting off of this fair value gap. This is exactly, like literally exactly what we want to see when it comes to these fair value gaps. Now, let's see what the next candle does, right? We get a new candle, right? Me knowing price is tapping to this fair value gap, we got a new candle. I will feel comfortable with taking my longs now, right? I will feel comfortable with taking my longs now, and I would put my stop loss. I will put it at this 50% mark now, since price already tapped into it, right? And then I will make my risk to reward probably a 1-to-1. So let's say about here. About here, somewhere right here, right? I make my risk to reward a 1-to-1, something right here. I enter right there, have my stop loss right here, take profit right here, and then I would just continue to let price play out all the way. And as you can see, price will have hit take profit beautifully, right? So this is a simple example of fair value gaps slash imbalances. Um, I wish I had a good example to show y'all of a true inverse fair value gap, but I'm not sure we could find some. Okay, this is the best example it's going to get. This is a inverse fair value gap, or a good example of an inverse fair value gap. All right, boom. So we can even go into it. We can go into it. Boom. Where that fair value gap at? Right here. We gonna say the fair value gap here, right? We gonna say the fair value gap is right here. We do what we do, draw our box from the beginning of this first candle to the end of that third candle, like this. Let me draw my box out. This second candle left that gap. So now I want to see price tap into this area, bounce out, then continue to push higher, right? Especially since it's already been in the uptrend. So I want to see price tap into my fair value gap and then move higher. Now let's play. That's what we want to see next. Boom. Price tapped into this fair value gap, right? That's exactly what we want to see. We want to see a tap. Boom. Price tap into here and got out. Beautiful. That's what we want to see. But before we enter, we want to see the next candle because the next candle is going to be our entry candle. So let's see the next candle so we can have an entry point. Because price tapped into our fair value gap beautifully. You feel them orders, tapped into it and got out. Exactly what we want to see. Now let's see our entry candle. Boom. This will be the next candle we get, bro. This will be the next candle we get, and this is why we just wait. We want to see price tap into it and get out just like it did, but we need that second candle so we can have an entry candle where we can get inside the trade from this fair value gap. And as you can see, our entry candle closed within this fair value gap. At this point, we would no longer want to take loans. We would no longer want to buy because price closed into our fair value gap. And not only did it close inside this fair value gap, it had a strong power, right? It had strong power in its fair value gap when it closed in its fair value gap. All right. So as we let it play, we would not want to take this trade. We would not want to see if price could reverse. So since we see price close inside this fair value gap, now to signal a reversal, it needs to close below all three candles. So price now needs to close below this point to show a full reversal to the downside now. See the next candle. The next candle just wicks this area, not a full closure to the downside. But we know now that we are not buying no more. We're not taking loans no more. We're just waiting on a rejection now, or we're gonna see if price tap into this. If it just wick this candle, because as you can see, a lot of times, price will never close below that full candle pattern. It'll only act like it. It'll start rejecting once it gets to this level, right? It'll start rejecting, start wicking. It fails to break. So a lot of times it'll come here and then bounce back into that fair value gap, or a lot of times it come here and then the break below that fair value gap. And once it break, that signal in a reversal. But we're going to see what it's going to do next. But actually, this is where I want to show y'all an inverse fair value gap. But in this example, it's not going to truly be an inverse fair value gap, but only because these candles are over wicking this big candle, right? So this is not a fair value gap, but it did disrespect this original fair value gap that we had, because this was our fair value gap that we had. Now we have another three candle pattern that ran through our bullish fair value gap. Now, this would have been a bearish fair value gap if this wick was a little bit shorter. Let's say this wick stopped here and this wick was a little bit shorter and stopped here, and it actually left a gap. But as you can see, with these three candles, is no gap in between. It's nowhere for me to draw a box, right? Like I told y'all, we draw it from the first candle to the third candle, right? It's no gap. That's not even like, you feel me? It's no gap, but it is an imbalance. It is a big move down with no green candles in the middle. It is an imbalance, a big move with no other candles involved. So it's an imbalance, but this is not a fair value gap. This is not a fair value gap. This is a fair value gap. And as you can see, is a big difference between these candles. Even though they're both big moves, it's a big difference, right? This three candle pattern, it leaves a clear gap in between. This three candle pattern, it does not leave a clear gap in between, right? It's overlapping, it's overwicking, whatever the situation may be. But it still did disrespect our original fair value gap. But we want to see if it's going to fully disrespect it and reverse. So let's see if candle could close below this point. Boom. We get a candle closure below this point. This is now signaling a reversal. Signaling a reversal. But before we enter on a reversal, right? We want to see price give us a little correction. We want to see if price holding this downtrend structure now. If price want to hold that structure, saying that it's going to reverse to the downside now, we need to get a correction that's still under this line, that's still under this area. So let's see if you get a correction point. This is not a correction. We want a correction. We want to put. We want to move up. We want a green candle now. We want a little support to show us that price is holding. Right now, we just big move down, and that's a lot of manipulation sometimes. So we're waiting for a correction candle, which will be right there. This is a correction candle, right? So now, after I got that candle, it was signaling to me that price is now ready to reverse. It's closed beyond this original fair value gap that we had. So now I would be willing to enter. But price has now already hit my target because we would now be selling to lows, right? Selling to lows and we buy to highs. But it already hit this target. So now I will have my stop loss at this level. Price should no longer go above this level. And I will have my new take profit probably at these lows, right? And let's see if price could play out fully. Boom. As I can see, stop loss would have got hit shortly after, right? And it actually didn't even get hit fully. Like, if you know what I'm saying? A lot of people probably would have stayed inside that trade and never exit out because it actually didn't even hit fully. But let's see. It probably will, most likely. Boom. Price hit your price hit your stop loss. And this would have just been a loss day. But this is what it looks like whenever, price disrespecting that fair value gap. And yeah, that's just what it would have been. Now let's see what price continues to do beyond a day. And as you see, look, it starts coming back into, now it's playing with this area of this fair value gap that we originally had, right? Because that's that original fair value gap. Now price is now playing with this area. It's keep coming in here, but it's not going no higher. It's not going any higher, right? It comes up. But now let's see, is it gonna go back down? What is it gonna do? As you can see, price start playing. At this point, price stops trending. It doesn't even trend no more, right? So this would have just been a lost day simply because you got caught in consolidation, right? After we took our trade, price decided it doesn't want to continue to the downside and start a downtrend, right? It started to consolidate. Price pushed up high, but it's still lower than this high. It pushed back low and it made an equal low, right? And then it gave us a high, but this equal high to that high. So it didn't start trending. Price never started trending, so we would have just took a loss just because it stopped trending, right? Price stopped trending, so it never had the chance to come to our target point. So as price play out, let's see if it comes back above the area. And as you can see, it just go from level to level until what? Until we could break fully back above these highs. When we break fully back above this level where price been rejecting, because price have not been wanting to break this level, right? Price have not been wanting to break this level. Oh, I'm sorry. Price had not been wanting to break that full level. right? It's just been playing, almost not really trending, just moving side to side. Then it gave us a little uptrend, but surely a downtrend. So it didn't really hold any trends. It didn't hold nothing, right? Until it broke above this level again. After it broke above this level, everything started trending again, perfectly fine, and it started moving how it should move, right? So this is just a video on fair value gaps, inverse fair value gaps, what fair value gaps would look like if they're valid or invalid. Obviously, we could have some better examples or some, whatever. Every fair value gap is not going to be valid. Every fair value gap is not going to be powerful. But this video is how you can understand fair value gaps and how you can be on the lookout for them and how you could use them in your trades. So I hope y'all understand that. And what I about to say? Comment below some questions y'all got that y'all want me to answer later. Comment some questions that y'all have, something that probably didn't make sense, and I'll probably go over it in the next video. But yeah, make sure y'all write notes on this, and yeah, y'all have a good rest of y'all day, man. We back on Monday in the trading.